Hey Gaurav, welcome.
Hi Bhaiya, how are you?
I'm good, I'm good. So मामा का फोन आया था. He was saying that you want to get into stock market, become a trader.
Yes भैया, जैसे you were in stock market from last 15 years, तो मुझे भी आपके जैसा ट्रेडर बनना है, सीखनी है ट्रेडिंग.
सही है, सही है. So ठीक है. आपकी पढ़ाई अभी पूरी हो चुकी है. You are already a postgraduate, so you want to build a career in stock markets. That is very
Yeah.
nice thought. So no worries. I have already
Mhm.
promised to uncle that I'll give my full support to you and will
Okay.
try to mentor you and guide you in your building of career. So yeah, so where shall we start with? Uh, should we start with the technical analysis?
Uh, I think we can start from basics so that सब कुछ आ जाए cover हो जाए.
I can teach you all the basics, but you need to be very patient and need to give
Yeah,
yourself time.
I'm
Are you
ready.
ready for it?
I'm ready for it. Yeah, I'm ready for it.
Ready for it? So without wasting any time, I would like to start with the very basics of the stock markets. Okay.
Okay.
So I tell you a brief background of it. So most people who are participating in the stock markets, they are not
Mhm.
aware that why do stock market exist? Why do stock market
Okay.
exist? How they came into being? यानी सिंपल बोले तो शुरुआत कैसे हुई स्टॉक मार्केट्स की?
Mhm.
कभी कोई भी चीज एग्जिस्ट करती है दुनिया के अंदर, उस चीज का कोई कारण है. देयर इज एवरीथिंग
सही
दैट
बात है.
एग्जिस्ट हैज अ पॉइंट टू इट. सो व्हाई डू दे एक्चुअली एग्जिस्ट? हाउ दे केम इनटू बीइंग? आए कैसे? किसी ने ऐसे थिन ईयर में अचानक से क्रिएट थोड़ी कर दिया.
सही है.
कुछ तो उसका बैकग्राउंड रहा होगा, कुछ कारण रहे होंगे. इन सबको जानना. अब
हम्म.
आपको यू कैन आस्क, अरे भैया मेरे को क्या होता होगा, अपने को तो पैसा बनाने से मतलब है,
हाँ.
राइट?
हाँ हाँ.
लेकिन मैं अपना बताता हूँ. आई ज्वाइन स्टॉक मार्केट इन 2007. When I joined stock market in
Okay.
2007, in January 2008, we saw the huge crash. People still remember that
Yeah.
as crash of
Yeah. Yeah.
2008. That was triggered by the
Mhm.
US subprime crisis of those time. तो तब बेटा आंखों के आगे अंधेरा आने लग जाता है. अरे अरे अरे, स्टॉक
Mhm.
मार्केट तो गया, अब क्या होगा? अब ये भी तो मैंने शुरू करा था काम करना, और ये तो स्टॉक मार्केट खत्म हो जाएगा और हो जाएगा. बट व्हेन यू नो दैट स्टॉक मार्केट आर एग्जिस्टिंग फॉर लास्ट 400 years and stock market has come through world wars as well and many crashes during all these
Yeah.
centuries, then you realize,
Mhm.
okay, they are not going anywhere. There are always
Yeah.
ups and downs in every kind of markets, but they are not going anywhere. So
Mhm.
knowledge of this history also gives you knowledge and better understanding of how things work, and that takes away that uncertainty and fear from you. Okay. So this is
Okay.
the reason why it is important to know about the basics or the background of the stock market. So I'll
Okay.
start sharing some screen with you and we will discuss why stock
Okay.
market. So this is the first thing that I prepared specifically for you. So
Mhm.
we read this. In 20th century France, the courtiers de change were considered with managing and regulating the debts of the agricultural community on behalf of the banks, because these also traded with debts. They could be called the first brokers.
First brokers.
So I don't have very wide details about these, but मोटा मोटी आप ये समझो कि हो सकता है एग्रीकल्चर प्रोड्यूस को वो कोई उधार के ऊपर या क्रेडिट के ऊपर डील करते होंगे. एंड देन देयर वर सम पीपल who might be working as collecting agents or maybe offering the credit to someone. So all these were services were done by these courtiers. Maybe I hope I am pronouncing this right. So these courtiers
Yeah.
were actually providing services to the bankers. So
Okay.
they were kind of brokers between bankers and the farmers or agriculturalists. So they were the first brokers. So historical records suggest that as far as like 800 years ago or maybe about 900 years ago, we saw something called broking community. In the middle of 13th
Okay.
century, Venetian bankers began to trade in government securities. So even at those time, European governments may be issuing some securities. I don't have much idea about it. So then Pisa, Verona, Genoa, and Florence. these are mostly Italian location, began trading in government securities during the 14th century. So 14th century was about 700 years ago. In 1602, the Dutch East India Company issued the first share on the Amsterdam Stock Exchange. It was the first company to issue stocks and bonds. Now listen carefully. I tell you an interesting story. Okay, just
Okay.
imagine about 400 years ago, 400 500 years ago. What was the main occupation of the society? What was the main occupation of the people?
Agriculture.
Main was agriculture, and then there were always some support services, like somebody is
Yeah.
knitting clothes, so there were knitting clothes, or even clothes was produced by this, by hands, what you call it,
Yeah.
this,
Handmade product.
the word is
Handlooms.
handlooms, yeah.
No.
So cloth was produced through handlooms, your shoes were produced by cobblers, your metal was produced by metalsmiths, or whatever. So everything was done locally. There were people doing stitching work at home, or maybe some professional tailors locally. So everything was probably made locally, and there was no big industry. So it was
Okay.
only about 400, 500 years ago when they found the way to developed economies like India. When Europeans found their sea route to India 500 years ago, there were new business opportunities were opened up. There were several new business opportunities were opened up. So main opportunity was that that was the import export business. The import export business
Okay.
of importing from India and exporting to India. So they would
Okay.
import things like spices and some cotton clothes from India, and they would export some glassware and some maybe some other items from Europe to India. So that was the basic business opportunities that opened up nearly 500 years ago. So obviously these Dutch guys and various other European countries, so they were very interested because it was a very big money minting opportunities for traders or business people of those times. But that required money, because you have to invest into ships, you have to invest money into stocks,
Yeah.
and you have to invest money into the staff, because the
Yeah. Labor
captains and
also.
the team,
Mm-hmm.
so they all needed money in advance. So if the
Yeah.
one voyage which could actually turn your money 10 times, uh, may be completed in a year, but then you have to
Okay.
make an investment for a year before you realize those profits, and no
Yeah.
individual had this much of resources, so
Mm-hmm.
that they can invest so much into a voyage or into this import export business. So what these people can do, 5, 10, 15 people can pool their money and do it. But even the money
Okay.
required might not be provided by people who have the like even 10, 15 people might not be able to generate so much of funds to complete this to take advantage of this business opportunity. So what they decided, that okay, even the small person, or maybe like rich person of those times, but now not only 5, 10 people can come, but let's say any number of people can come, and let's say somebody wants 1% share in the whole business, so even he can take
Okay.
1%. But that would mean that
Okay.
there are hundreds and hundreds of business owners now. So they were all called shareholders because they had the share of the
Yeah.
whole business,
Company.
share of the
Yeah.
share into that. So the whole
Business.
that edifice was called company. It was called
Yeah.
company, and all those shareholders were called stockholder or shareholders because they all had a share in the profits of the company.
Business or company.
But
Yeah.
now there is one challenge. There's one challenge here, that now there are hundreds of shareholders, hundreds of owners. Now who would run the company? Who would run the business? Who would manage the voyage? Who would select the stock? Who would select the items to be imported and exported? Who will sell them? Who will buy them? All 100 people will do it.
Okay.
Is it possible?
No.
No,
No. No. It will be
because
chaos.
obviously it is just practically not possible. So
Yeah.
what now? This is also, you are here, you also understand the separation of ownership and management. Okay,
Okay. Okay.
a joint stock company has its unique feature is the separation of ownership and management. Generally, a proprietary business, what happens? A
Only
proprietor, a
sole
proprietor,
decision maker.
a proprietor himself is the owner. He owns whole of the company or the organization or the business, and he is the one who is generally running the business. Maybe he hires some people,
Yeah,
but he is generally the boss. Same happens
yeah.
in partnership. Two, three, four, five people, hardly more than 4 or 5 people join in a
Hmm.
partnership, and mostly they jointly run. Uh, maybe they have separation of duties, but they are jointly part of the management. So they are owning as well and they are managing as well. But when we have to run
Okay,
big organization which require big funds, which is beyond pooling of funds by 4, 5, 10 people, then we have to uh, get into the company setup. At that time, we have
okay,
to also separate ownership as well as the running or the day-to-day management or the overall management of the company. So the company is governed by its board of directors. Company is governed by its board of directors, and board of directors are in turn managed by the shareholder. So this is why all these the
okay,
voting rights and the promoters and all these concepts. Now we are able to make a sense of it, that how the whole joint stock company came into being, because it is also before the industrialization or when the big businesses started, when the big manufacturing
yeah,
or big businesses started, like at 400 years ago, import export, importing from the India or the eastern part of the world to the western part of the world, this was probably the biggest trade opportunity or biggest business opportunities that was seen. So
okay,
that is when the requirement of big funding was required, separation of management and ownership was required, and this is how the companies were born, and this is how shares were being issued, right? So this
okay,
is now the second part. Now the company is built and the shares are issued, right?
okay,
Company is built and shares are issued. So let's say you are owner of a particular company which is doing import export business from India. You are a Dutch resident, and probably you are a local doctor there, and you have invested some separate
okay.
funds in that company. Now voyage takes place, and after 1 year the voyage is completed, and management calculates that okay, whatever that we have invested has turned into 3 times. So let's say you invested $1,000, and the profits that they have brought out is $3,000. I don't know what
3,000.
was the currency of that time, but let's just call it
Yeah,
dollars. So you are very happy. So you want to say, you want to go to the owners that okay, here is my ownership. Now give me $3,000. Now give me three
yeah,
thousand dollars. And
yeah.
like you, there are hundreds of other investors who all want
Hmm.
their money thrice.
3,000. Yeah,
$3,000. Yeah, they want their tripled money back. So
yeah,
now you go back to, and now hundreds of people like you go to management or the board of directors that okay, give us our money back. Now, but at the same time, there is another set of people. They say, okay, it is very profitable business. Let's start with another voyage. Why do we
yeah,
why do we finish it? Let's take another voyage. We will make these $3,000 into $9,000. Oh, why?
yeah,
But not everybody is willing to risk their money again. Some people say, no. Okay, I am ready to invest $1,000, but at least give me $2,000 back. So there are
yeah,
different demands. Somebody wants to stay invested.
yeah.
Somebody wants to withdraw all of the money. Somebody wants to invest part of the money,
Withdraw some part.
withdraw part of the
Yeah,
money. How it will happen
yeah,
now? How it will happen?
yeah,
So what happened, that okay, some people said okay, you know how property is being brought and sold. How properties, there
yeah.
are property dealers. You go to them, you say I want to sell this XYZ property,
Buy this.
and they make a note
Yeah,
of it, and then somebody XYZ comes and say I want to buy
buy
a
this.
property looking with certain specification, and broker says okay, I have suitable property for you, and broker matches buyers and sellers, and then there is a deal. Okay, so
Yeah,
similarly now with this requirement, we came back to this hypothetical example of a company which is doing import export business with India 400 years ago. So now
okay.
the share of the companies, I told you there are three situations. Some want to stay fully invested, some want to add more investment, somebody wants to
And so
cut down their investment, and
withdraw some part.
somebody wants to, some new person also wants to get into this business. They say okay, it is
Yeah,
very profitable business, I want to get into this, and I'll invest some money because I know my uncle turned his $1,000 into $3,000. So I want to get into this business. I will also risk my capital. So now there are different demands. So what happens? Somebody opens a broking business that, okay, those who wants to sell their holdings come to me and tell me how much they want to sell. And those who want to
Okay.
buy come to me, tell me how much they want to buy. So this is how broker started. This is how
Okay.
broker started. That, okay, just like property brokers, of present times,
Yeah.
similarly there was
Yeah.
broker
Yeah.
of stock market. So for
Stock
any
market.
change of hand in the shareholding or the stock holding, they will charge a certain commission and let buyers and sellers have a deal. But now how will
Okay.
deal happen? Like just like property, it was depending on the negotiation power of the each party. Buyer and seller will negotiate with each other and then they will strike a price. Now,
Okay.
many such companies came into being. Many different companies who were running different kind of businesses, maybe import export with different regions of the world or whatever. So there were several companies. So broker had so many companies to handle now. Now broker is obviously,
Okay.
there was no online thing at that time. Everything was physical. So somebody is
Manually. Yeah.
actually having a practical office somewhere in Amsterdam, and people are physically
Yeah.
coming to them, and everything was physically happening. Your physical
Okay.
presence, everything was on paper and everything was on record. Slowly the market started getting bigger, and
Yeah.
there were several brokers who were sitting in different parts of the city. So they will also coordinate, a broker will coordinate with another broker, because say I have
Yeah.
got 5 sellers of a particular company, other broker might be having 5 buyers of the another company.
Buyers. Yeah.
Okay.
Yeah.
So it was not a domain of one particular broker who was handling everybody. So all brokers, they might have probably thought, that, okay, what we can do, that obviously to create efficiency within ourselves,
Yeah.
let meet up in town hall. Let's meet up in town hall, and we can meet maybe probably once in a week, and
Okay.
there we can talk about what uh, what deals that we have. Like those who are the sellers, they can come and tell about their stock ready to sell. Those who are willing to buy, they can talk about stocks who are willing to buy. So now brokers started meeting up. Every broker had
Okay.
some stocks. They were also called issues. So
Yeah.
there were different, every company was called issues, or let's say companies for easier understanding. Okay.
Okay.
You are getting so far
Okay.
what I'm trying to narrate you,
Yeah. Yeah. Yeah.
the story, how it
Yeah.
all
Yeah.
started. So
Mm-hmm.
different brokers would meet up in a, let's say, simple hall, and there they will communicate with each other. About which stocks that they want to sell, and they will other person who are willing to buy, they will communicate that what their clients are willing to buy. Now there is that one part is the amount that somebody is willing to buy, that I want to buy 2% share of this company, 1% share of this company. It could be number of shares, it could be percentage, whatever, hardly matter.
Yeah.
Now the second
Yeah.
part is, at what price
Price.
it will change hands.
Okay.
Any stock or any share of a company, it has to be changing at certain price. So
Yeah.
exchange is doing this function, right? You
Okay.
invested at something at $1,000, and it has produced a money of $2,000. Now that it is such a profitable company, so
Yeah.
your 1% holding in that particular company should be of huge value. You will say, okay, it is a very valuable business. So my 1%
Yeah.
holding, even though I invested $1,000, but it is so much highly valued, I won't even sell it for $10,000. And somebody is
Yeah.
say, okay, it is such a profitable business, I am ready to even pay $10,000 for this. So somebody who is
Okay.
ready to sell at $10,000, and somebody is willing to buy $10,000, and that is where the deal is struck.
Deal close. Yeah.
Where that is where the deal is struck, and the holdings change hands. So this, so first you go to brokers, and broker goes to the hall, which later on called exchange, which
Exchange. Stock
stock
exchange.
exchange, because that is where stocks change hands. So this is the
Okay.
word stock exchange. So first came the companies, then came the brokers, and then came the exchange.
Stock exchange. Yeah.
So stock exchanges are providing lot of benefits. Now listen to this carefully. Stock exchanges are providing what benefits? stock exchanges are providing benefit of price discovery, that when we go to stock
Yeah.
exchanges, you can get price discovery, proper price discovery. Earlier, how it used to happen? It used to happen 1-2%, 1 to 1% negotiating with each other.
Yeah.
So when we are negotiating each other, it is very difficult to get the right price. Buyer feels,
Okay.
oh, I have bought expensive. Seller feels, oh, I have
Yeah.
sold it lower price.
It
But
is
when
very.
price is
Yeah.
discovered with some scientific process, with some logical process, then everybody feels, okay, I got the right market price.
Yeah.
So one thing is price discovery, but even bigger is that exchanges enable that anybody can change their change or sell their holding. So now
Okay.
I give you another example. Would you be willing? Would you be willing to invest in something, any instrument, any security, whatever, any property,
Okay.
whatever, where you are not certain about the exit? That array, if
No.
I want to sell this, how will I able to sell this? What is the exit?
No.
You will be very
It will be
circumspect.
very risky.
You will say, oh, that seems a nice business, but how do I get my money back? How do I make
Yeah.
an exit? Then you say, okay, there is no exit. You might get your money after 10, 20 years. You will say, what if I need it after 2 years, or after 3 years? Or you want to say that, oh, no, I don't want to commit my money for 10 years. I can just commit for 2 years. So you want an
Yeah.
exit route. So stock exchanges provides an exit route. So exit route
Okay.
is actually the precondition for investing. Exit
Okay.
route for any investment, you propose for any investment to anybody, you propose any investment to anybody without providing an exit route, you will never get any funding. So
Yeah.
companies
Correct.
were getting funding only on the basis that they had an exit route of selling their stock to somebody else. It might be at a higher price or lower price, that is another issue, but there has to be an
Yeah.
exit route. So exchanges provided that exit route. So the exit
Okay.
route at the market price, that was the key point which attracted people to invest in joint stock companies, and how this also led to the establishment of big industries and big businesses later on. So this is the how I told you about how joint stock companies came into being, how separation of ownership and management happened with joint stock companies, and also how stocks changed hands, and what is the meaning of this word stock exchange, because
Stock
this is the
exchange.
place where stocks would change hands from one person to another.
Another.
Client goes to broker and broker goes to exchange, and then later on in exchanges, as the volume grew, people started shouting names, and these kind of
Yeah.
uh, signs were used to sell stocks, and with word of mouth everybody was trading. And you must have seen it in you might see
Movies and
YouTube
web series.
videos where you can see the
Yeah.
floor of house, where American exchanges floor of this exchange, where everything was done
Yeah.
manually on the floor of
Mm-hmm.
exchange. So this is how exchanges ran for centuries, on floor in physical
Okay.
form, and just by the show of hands, or making sound with mouth or show of hands, they were able to deal with various stocks for centuries. Now everything across the world has become online. So further we read these slides. Amsterdam Stock Exchange is also said to have been first stock exchange to introduce continuous trading. So probably it meant that every day they were trading. I don't have
Yeah.
exact details about it. So, and then they also have short selling, option trading, debt equity swap, merchant banking, unit trust, and other speculative instruments such as we know them. Okay, we will also know about all these different kind of equipment, these instruments later on. So now we know there are now stock markets virtually in every developed economy. The world's biggest market being in the US, UK, Japan, India, China, Canada, Germany, France, and Netherlands. So we know India has a very well developed stock market. In fact, you will be happy to know, Gaurav, that India, in terms of number of contract traded is world's
Yeah.
number one when it comes to stock exchanges, index stock, futures and options. We are the number one. We are number one in
Okay.
world in terms of number of contracts traded. In terms of dollar value, still US may be higher than us, but in terms of number of contracts traded, India is number one. So India has
Exactly.
a huge liquidity in stock market, and our market capitalization is way more than 1 trillion US dollars, or 1,000 billion US dollars. Is more than that is our market capitalization, and that is always growing. So India is one world's fifth largest economy in terms of dollars, and third largest economy in terms of purchasing power parity already. So things are only looking up for India and its stock markets. So I've already covered the basics, how they came into being, and now we move on to function and purposes. So some of this thing we already discussed, and then I read it
Yeah.
formally. Allows businesses to publicly trade it. So obviously businesses can publicly trade, so they can
Yes.
so the owners can change holdings, raise additional capital for expansion by selling shares or ownership of the company in a public market. Liquidity, the liquidity that an exchange provides affords investors the ability to quickly and easily sell security. So any investment which is more liquid, is obviously more attractive. Like we want to invest in something, so we would ask, how liquid is it? Anything that is not
Yeah.
liquid or which takes a long process to sell is obviously less attractive in terms of investing.
Okay.
History has shown that the price of shares, other assets, is an important part of the dynamic of economic activity and can influence or be an indicator of social mood. An economy where the stock market is on the rise is considered to be an up and coming economy. In fact, the stock market is often considered the primary indicator of a country's economic strength and development.
Develop.
Right? So it is not like certain, but as such, a growing stock market, share prices going higher, or the size of it, so that will generally happen when the economy is strengthening or economy is growing. This is stock market is a barometer of economy, you can say. Exchanges also act as clearing house of each transaction. Now we come up to like what present day exchanges are also helping in many ways, not just the price discovery or liquidity. They are also exchanges clearing houses, means that they collect and deliver the share and guarantee payment to the seller of a security. Now let me elaborate a bit. Okay, what it means, the clearing
Okay.
house. Now let's say a property transaction is happening between a person A and B. Okay, so
Yes.
they want to enter into a transaction, and then there is some dispute between A and B. A has made some payment to B, and now B is declining to transfer the ownership of the property. Now there is a dispute. What they can do to resolve this? They can go
To
to courts. They
court.
can go
Yeah.
to courts to resolve this. But in term talk of when we talk of when we talk of sharing when we talk of changing heads in stock exchanges works as a counterparty. So A and B are not concerned about the default from anybody, because exchange
Okay.
will have mechanism that A makes the payment and B transfers the assets,
Ownership. Yeah.
ownership of the assets. So e- exchange is acting as the middleman through its brokers. So exchange, brokers and clients. So exchange is in the center, and then there are brokers, and then there are clients. This eliminates the risk of an individual buyer or seller that a counterparty could default on the transaction. So when we deal with through the exchanges, we are not concerned about that, okay, I have sold some stocks, whether I will get money or not, because exchange has this mechanism or this strength that they ensure that anybody who is selling their stocks will get money for it, and those who are paying for some certain stock will get their stock for the money
Yeah.
paid. So both these parties can live peacefully because exchange has this mechanism. Okay,
Okay.
the smooth functioning of all these activities facilitates economic growth, in that lower cost and enterprise risk promote and production of goods and services as well as employment. In this way, the financial system contributes to increase prosperity. I'll explain this in simple terms. Okay, when anybody with even with small amounts can participate, when that person can become a business owner, and there are people who have the ability, who have the management skill, who have the technical skills to run a business. So stock market provides the situation that anybody who has the right product, right thinking, right set of business model can go to markets and raise a capital and start his business. So this in terms, so those countries which have a developed stock market have a larger economy, booming economy, and that also, so larger economy and more amount of money with people would mean greater prosperity or more
Yeah.
money with the people. So now read this. The financial system in most Western countries has undergone a remarkable transformation. One feature of this development is disintermediation. A portion of the funds involved in saving and financing flows directly to the financial market instead of being routed by the traditional bank lending and depositing operations. The general public's heightened increase in investing in the stock market either directly or through mutual fund has been an important component of the process. Statistics show that in recent decades, shares have made up an increasingly large portion of the household financial asset in many countries. A major part of the additional financial portfolio has gone directly to shares, but a good deal now takes the form of various kind of institutional investments for group and individual, e.g. pension fund, mutual fund, hedge fund, insurance investment, premium sector. Now I'll put it in context. Okay, I read it through quickly because I want to come to the point that simple what is happening in Western countries, that more people are investing in stock markets, direct companies. They are investing either directly or through mutual funds or through various hedge fund schemes or through insurance or through even government pension fund, like here in India. Now we are also following the West in this. More and more people are
Yeah.
joining stock markets directly. There are more DP accounts are opening. More people from every strata of the society and all the regions of India are coming to the stock market. People are investing more in mutual funds. There are more different kind of AIF and hedge funds, etc. Similar kind of things are coming up. There are more insurance schemes which are investing in equity, such as ELSS or various insurance schemes. And then there are government funds, the national pension scheme, that also invest in equities. So more and more investments are coming directly into equities. Earlier, if you go 20, 30, 40 years back, larger portion of the savings was parked into bank FDs, etc. And then if most businesses were relying on getting credit from banks for their funding requirements, but now so much of the businesses are raising capital directly from markets or through investors. So this is what this slide is highlighting: how Western world is ahead of us and how we are quickly catching up onto them. So now here are some trivia questions. 5 oldest stock exchanges of the world. Antwerp bourse.
Okay.
So stock market are also called bourses. Bourses. So
Okay.
Antwerp is in, I think, Austria. Lyons, I don't know where it is. Toulouse, Hamburg, Germany. London Royal Exchange, obviously in England. What were the 3 oldest stock exchanges in the Philadelphia, New York Stock Exchange, Boston Stock Exchange. So where were the 3 oldest commodity exchanges in the US? Chicago, Kansas, New York. So what were the first publicly traded security in the US? 80 million in US government bond that were issued in 1790 to refinance Revolutionary War debt.
What?
Okay. So now you know that stock market are existing in this world for at least, like, I mean, stock exchanges are existing for last 400 to 500 years. Okay.
Yeah. Yeah.
Now anybody who calls it Satta Bazaar or who calls stock exchanges at meaningless, or what is the purpose of trading, or what you are doing, you are wasting your time. So you can you don't need to tell them all this history. You just can
Okay.
just laugh it off that, okay, live in your world.
Yeah.
I am just happy to be a finance professional or a trader or an investor in stock market, because they serve a very important purpose. Okay, now I come to Indian stock market history. The origin of the stock market in India goes back to the end of the
One.
18th century, when long-term negotiable instruments were first issued. However, for a practical purpose, all real beginning occurred in the middle of the 19th century after the enactment of the Companies Act in 1850, which introduced the features of limited liability and generated investor interest in corporate securities. ठीक है? So in India, we had Companies Act in 1850. We had Companies Act in 1850, which introduced the feature of limited liability. So again, like those Western world, they had this concept of separate ownership and separate management 400, 500 years ago, but it was brought to India nearly 170 years ago. 170, 75 years ago in 1850 when the Companies Act was brought in, and then everything was legalized. Oh. So I told you when how things started, when first came the companies, then came brokers, and then came exchanges. So similar thing
Yeah.
happened in India. In
Okay.
1850 we got the Companies Act. And in 1875 Association of
We got
Bombay,
the broker.
the precursor to Bombay Stock Exchange. So here also happened.
Okay.
As soon as companies came, brokers came, and brokers, when there were several brokers and volumes were high, they created an association. That association decided to meet in a particular place, and that gave birth to exchanges. Now Bombay was the economic hub of the country, so we had the Bombay Stock Exchange.
First exchange. Yeah.
Bombay Stock Exchange. And now in every big city there was exchange. We had a exchange in Delhi, we had exchange in Calcutta, we had exchange in Ahmedabad, and we had exchange in Chennai, erstwhile Madras. So this is how we had different exchanges operating in different parts of the country, and they were serving the same purpose that we already discussed. So Gaurav, in all these slides, we learned about the history of stock market, how joint stock companies came into being, and joint stock companies led to formation of brokers who used to deal in securities, and then we moved on to having exchanges of stock exchanges which were specialized in changing hand of stocks, and then we saw how all this setup which started in Europe came to India. Now in next session I'll be talking about Indian stock market specifically. Presently we have two electronic exchanges, mainly National Stock Exchange of India and Stock Exchange Mumbai, or popularly known as BSE, Bombay Stock Exchange as well. So NSE, BSE. So we'll be discussing more specifically about these two exchanges, different kind of products that are available, and obviously various details. So we will take them step by step. So this is all I have got for you today, and we'll be meeting again shortly. So in the meantime, you revise all that I have told you, and keep learning new things. Yeah.
Okay, and thank you so much, Bhaiya, for this amazing session. It was very interesting, and I have never seen or never heard about all these things, that this history and all these things. Thank you so much. This was amazing.
Great. Even I had great time, and it's always good when two brothers sit together and discuss something. So have a great time ahead. We'll connect and fix up a time again for our next meeting. Have a great time ahead. Okay, take care. Bye.
Thank you. Bye.